किती वेळ येतं? Good morning, everyone. Rashmi Shah here from Dallas. Along with me is there Sanket, uh, and it's 11 in the morning in India and 12:30 in the evening in Dallas here. So today I'm going to talk about banking and finance, role of banking and financial services industry in India. Now, please note that this presentation is for residents of India and people living in India, and not for residents living in United States or North America. This is only for people living in India. And I'll be glad to take questions. You can text the questions on the panel there. Once I finish my talk within 20-25 minutes, I'll answer your questions. So let's begin. The role of financial banking and financial services in India's economy and why we should focus on that. So before I begin, let's summarize what's happening in the world today. We are caught in a perfect storm. Like we're in the middle of Pacific Ocean, ship, and there is a coronavirus spread, fear of health issues, lockdown of the global economy, there are job layoffs and business losses everywhere, meltdown of real estate values, correction in financial markets. We all are praying that, looking for when things will be normal, and every day in the media and news we hear a lot of bankruptcies and stories. So world economy is caught in a perfect storm. So how do we navigate from here? So the objective of this presentation is how do we think through this, because emotions can be very dangerous. Just now, we all are sitting at home and watching constantly 24/7 news and messages on WhatsApp on how bad things are there, and your emotions can take you to really do some bad decisions. So rational thinking is very much required now. So I'll share some data and insight how we think rationally and logically from this perfect storm. Because when there's a storm, the more cool and calm you are, the better way of to get out. The more you panic, you'll take panic always takes you to take you wrong decisions. So the objective of this presentation is to help you calm down and think through. Okay. So the other thing, if you see today, the latest, this is just, I've taken about 20 minutes back, the total number of cases worldwide and in US, correct? So in US, there are 925 cases so far, 9,25,000 cases, 52,000 deaths. So number of deaths are 52,000 in only in United States of America, which is double in last 1 week. From 25,000, it went to 52,000 in just 1 week. So that's the bad part. In India, we have 24,500 cases so far, and 780 people have died, and 5,500 people have recovered. So in India, still we are way better than what's happening in US, but still India is a poor country and with a huge populations, and we can't afford to keep the economy shut down for a longer period of time. So how do we navigate? So what is the impact of all this? Now, if you look at this, in my last webinar, I had shared this slide. What are the things we are supposed to look for the rest of the year, 2020? So starting from April 25, that is today, till 30th June, the world is looking at the flattening of the coronavirus curve. They're looking at, and every country is preparing how gradually you can open up the economy. Like India passed an order today that you can open shops and small shops, correct? Same thing. And we are going to get a lot of quarterly results of what happened to the corporates in first quarter of 2020. So these are the events which are going to drive the stock market prices till 30th June. How we slowly open up the economy. From 1st July to 30th September, we'll really come to know the actual damage done, means rough estimate of the damage done by the coronavirus, financial damage done, and how various sectors and companies are trying to adjust. And every company will come out with a strategy, so that we'll come to know. And number of bankruptcies and job layoffs. There is going to be massive bankruptcies across the globe, and there are a lot of jobs layoffs. So the first batch of job layoffs were frontline people who were working in restaurants, tourism industries, and all that. The second line of job layoffs are going to be from corporate offices, so management, high white collar jobs. That is yet to come, but that's also going to come starting from 1st July to 30th September. And then in the last quarter, October to December, we are going to see the global volatility of the stock market prices because of the US presidential elections. And we'll come to know what are the long-term impacts of coronavirus and what is the progression made in vaccines. Now, they are saying that coronavirus impact, the fear of coronavirus is not going to go away for at least 18 months from today. So you don't expect the solution that a world is going to get cured in next 18 months. It's going to take more than 18 months. We'll have to produce 8 billion vaccines, and it's not so easy. So first they have to develop the vaccines, and then, so this is the path for the life to become normal. So for next 2 years, if this is the path, it's going to take a lot of turmoil in the businesses and the financial market. So how do we navigate through that? So I'll just share some of, and we'll get a lot of opportunities. Now, so this is the slide which I have taken from a firm in US here, and which says that there are different sectors like financial, and so in the columns there are different sectors, and in the rows are the impacts like personnel, operations, supply chain, and the revenue impact and total assessment of that industry. So if it's entire black, that means it's very bad, severe, and if it's white, it means minor impact. And so there are 5 different stages, correct? So now if you see, the banking, energy, healthcare, communications, media, publications, retail, so there are different sectors. Now, if you see in the personnel wise, banking and financial sector is still working, whereas this all sectors, nobody's working there. Like retail, manufacturing, universities and colleges, everything is shut down. Now in operations, banking and financial, 50% people are working. Means they are available, and that is the highest which has got. Now, like in this bad times, the only 4 sectors which are working is hospitals, financial services sectors, the government sector, like public sector, which is this one, public sector, and groceries, correct? Groceries. This few other thing, everything is closed. Now, as far as the supply chain impact is concerned, banking and financial services has no issues of supply chain. You can today online deposit money, withdraw money, invest in share market. None of the stock markets in the world have closed down. Initially in the first March, there was a talk going on that they should shut off the stock market. Every government opposed it. So banking, so the supply chain wise, it's a very good thing, white, complete white. And then the revenue wise, now if you see revenue, that is the income part. There, every sector has got affected. The entire black means it's going to get severely impacted. So why revenue is getting impacted in banking and financial services? Because people are not able to pay the loan installments back. At the same time, bank has to suppose to disburse more and more loans, and that's why it's severely impacted, correct? Now, if you see the other side here, travel, tourism, there is zero revenue. But in case of media and entertainment, Netflix, Amazon Prime, all those are working, they're getting revenue, and that's how this industry works. Now, overall assessment of each sector wise, if you see, banking and financial is still not that bad off. That's the only sector other than government sector which is having good working, correct? Means otherwise every sector is severely impacted, and that's what I'm talking about. So In fact, in the US, what I observed this time, that most of the stores are not accepting cash because the currency note can carry coronavirus. They are only accepting credit card payments and digital payments. Now, same case is going to happen more in India, correct? After demonetization, the biggest impact is going to be on that kind of a sector, more digital payments. So, what I'm trying to say is the banking and financial services and insurance sector is going to get a lot of business diversion from cash economy after the demonetization. Now, having said that, what are the impact on financial investments as of today? So this data I have collected from our own investments. Simplicity is advising about 800 families and the portfolios which we are investing in, that how those portfolios perform. So if you look at this, the banking sector has given in last 1 year the worst return, minus 35, small cap 33, mid cap 24, large cap minus 21, MNC minus 14, technology minus 12. The US has given plus 13% return, and the pharma, the best performing, is 17% return. Now, if you take a 5 year, the banking sector is given 4% per annum, small cap minus 1%, mid cap 3%, large cap 2%. So what I'm trying to even in a long-term perspective, banking has performed better than small cap, mid cap, and large cap. The best performing has been the US because the rupee depreciated, and US is the number one economy in the world. Now, if you see this the 3 and 6 months return are absolute, 3 and 1 year are absolute, and 5 years are compounded. So the worst performing sector today is banking, and that's why I want to talk about it. Why I want to talk about it? Because when a sector is performing the worst, we have to evaluate it. What is the future of that sector? Now, if the way I look at it, in India, the Indian economy cannot bounce back without banking sector. So this sector is going to lead the recovery. So as the Indian economy recovers, the best opportunity to make money is the banking sector. And that's the reason I selected this topic today. Now, what do we consist of banking sector? So what is banking sector consist of, correct? There are two kinds of banks, commercial banks and retail banks. So long-term project financing, lines of credit, and foreign currency trade, they're commercial banks. And retail banks is personal finance, like HDFC Bank is more retail bank and less of commercial bank. State Bank of India, or you can call it ICICI Bank, they are more commercial banks, wholesale banking, right? So there are two kinds of banks, commercial banks and retail banks. And then there are other financial services sectors which are going to I have really opened up in last last 20 years in India. One is credit card companies, asset management companies, there's mutual fund companies, NBFCs, insurance, and fintech companies. Fintech companies means all Paytm and those kind of digital, Google Pay, and so these are the financial services sector. Now, if I look at today, the financial services sector, banking and financial services sector, 50% is banking, 50% is financial services. So any institution which has services income more is much better off. So banking financial services sector is very big, and it impacts every aspects of our life. Now, if you go look at this sector from different perspective, now let's compare the role of banking and financial services sector in India and America. So here S&P 500. If you take US, the biggest sector in US is IT sector, which is 25%, healthcare is 15%, and financial services 11%. Now, if I compare this with India, healthcare in India is only 1.5. So this is going to grow. That's why pharma sector is outperforming. Now, information technology is 15% in India, Infosys, TCS, and banking, which is on financial services, 11 in US. In India, it's 40%. Now, why it is 40%? So in America, banking and financial services sector was 40% in 1960s and 70s. So Indian economy is almost about 30-40 years behind the US economy. and we are in a developing economy, and America is a developed economy. So the role of in the developing economy, the financial service sector plays very important role. Now, this coronavirus is going to impact this sector massively. Now, for example, 60% of population in India is rural India, and they were still investing in cooperative banks, chit funds, cash. Now, that segment of population is going to come through digitalization. If they were investing in cooperative banks which were not online, they had no chance to withdraw money, correct? So same thing is happening. Now, if you ask any 25-year-old engineer today, he is not going to open an account in a PSU bank or any cooperative bank. He's going to open an account in private sector banks. So that's the another thing which coronavirus is going to drastically impact. So this modern banking and financial services sector is going to grow still more, and the economic recovery is going to start from this sector. So Indian economic recovery will start from this sector. This is the first sector where you will see economic recovery. And that's why I've taken. Now, if you take a big picture, many of you would have seen this slide in my previous presentations when I used to do in India. So if you take a total balance sheet of India, if India had 100 rupees, 54% rupees was in real estate, 11 rupees was in gold, 30 rupees were in bank deposits, insurance, PPF and cash, and 5 rupees were in equity and equity mutual funds. So this is the balance sheet of India. Now, the next 20 years, it was projected that this balance sheet of India would look like this, that real estate importance will come down from 54 to 35. Gold will remain same. Other financial assets also will remain same. And the equity mutual funds and debt mutual funds will become 25. So this was, now based on this coronavirus, this process is going to get speeded up. Instead of 20 years, this will happen now in next 5 to 10 years. Okay, currently you may think, how is that possible when markets are going down? Yes, agreed, the markets are in turmoil today, but what it taught everyone that even in this market, you can withdraw money and have access to your money in the mutual fund industry and stock market, whereas you can't have in those physical banks or physical assets. So this transition is going to get speeded up. Now you may say, oh, last week Franklin Templeton, that bond debt fund, they closed 6 schemes. I said yes, that's true. That's a sad, small bad news. But in a big scheme of things, that's only 0.5% of mutual fund industry. Now, if you look at this way, that 5 people died because of coronavirus in somewhere in Bombay. You can't generalize that, say everyone in Bombay has coronavirus. Everybody's going to die. Not true, correct? The same way, in every sector, there is going to be some bad apples or some wrong decision making has happened or someone gets trapped. The strategy is not in tune with the economy, and this kind of things are going to happen. But that doesn't mean that everything is going to be bad. So that's what the point I'm saying. But in spite of this, there is going to be a massive transition from this 54% to 35, which was I was expecting over next 20 years will happen in next 10 years or maybe 5 years. And this is also going to happen, digitalization and the change in, and that's why the banking and financial services sector growth is going to lead in the opening of the Indian economy. Now, I'll give you another example. So overall, physical assets are today 65, financials are 35, and it's going to be this way in next 5 to 10 years. And this is a very big major jump in the economy we will see. The other thing, why banking and financial services will recover in India, because the entire market hasn't been tapped. Today, the private sector banks are only in the major metros. If you go in the interior of India, still we have the old, and they are not able to serve the customer digitalized. So that digitalization is going to increase the market share. Investment in equities and bond are yet to catch the momentum. In India, it's only 5%. In America, it's 60%. 60% of wealth is tapped in equities and bonds. And every person's retirement is in equities and bonds here. In India, that's not the case. And the number of online transactions in India is going to tremendously increase because of this coronavirus and demonetization and focus on digital India. So this sector is going to start. Then I'll share more information. The surge in digital banking at the time of after 2016, digital banking increased by 75%, increase in cash withdrawal by 45, and physical one-to-one banking was only 25%, whereas digital banking was 75. These numbers are going to go even further skewed. I've been living in America for last 20 years. I go to a bank branch once in a year for doing some change in account structure or something like that. Otherwise, I not required. I have not written a check. I don't have any checks in US. Everything is online. Now, same thing is going to happen in India. And this is going to speed up more. This is going to be speed up more in the coming few days. Digital wallets. Now, as the phones become more and more powerful, we may not require credit cards. We may not require debit cards. Everything of all banking transactions will be done through phones. So there's a tremendous growth there going to happen, and which will speed up the economy. Now I'll give you this example of China's economy. In China, the mobile payments are 2.5 times the size of the GDP. In India, it's still not even 50% of India's GDP. Now, this is going to speed up, correct? So, we'll see this kind of growth in India in next few years. That's why Facebook, Google, everybody is focusing on India. Now, at a high level, here's what I'm showing you, the macro picture. The economy goes in cycles. Now, because of this coronavirus, all the world economy, they came to recession. So, you see China is a little bit ahead of the rest of the world, and India, US, Japan, South Korea here, and we are going to see an upcycle. So when upcycle starts, next 3 months, 6 months, there's a sector which leads that. In America, the lead sector which will be leading will be IT and healthcare. In India, the lead will be banking and healthcare. So this is where the lead is going to happen, and we have to make sure that you're properly positioned, your asset allocation and investments are properly balanced off. So this is the chart which I'm trying to show you. And the other aspect, correct, why the markets have bounced back 25% in the last few months, because the US Fed has pumped in $10 trillion, which is 4 times of India's GDP in the last 1 month in the economy. You see, this is the US which has done. Now, the Europeans and the Japanese and the England, they are also going to do that in the coming 2-3 weeks. The Indian government has not yet pumped a lot of money, liquidity in the market. India may not do very big scale, but it definitely there will be some 100 billion or 200 billion pumping of the money in the financial markets in the coming 2 months. You can see that. So that will boost the asset prices and the engine will start. And that's why I'm saying this is the right time to increase your allocation to banking and financial services. And that is the objective of this today's webinar. I did that. Yes, there are going to be hiccups, but you always make money in a bear market when you invest in a bear market. So I'll give you a classic example. In 2017, pharma, when all FDAs and every US government was going after every Indian pharma company, and the pharma stocks were going every day at 52-week low, that time we called all our clients and made increased allocation to pharma funds. See, and within 2 years, what happened? The pharma funds are now in this market, they are outperforming. So you invest in a bear market. In 2018, the Indian IT companies were going through very bad phase. At that time, we increased the allocation to the IT. Yeah. Now, currently, the worst performing sector is the banking and financial services. So I look at it this way, that there is an express train and there is a passenger train. The express train ticket prices are normally 30-40% higher than the passenger train. Now, on a railway station, one day you go and you see, because of some external factors, the railways announced that the train ticket can be used on express and passenger train at the same price. So if you get the same price, which train are you going to catch? Express train or passenger train? Of course, express train, because you'll reach faster. Now today, because of this global coronavirus thing, the express train, which is banking and financial services, is giving minus 35-40% return like a small cap. Now, from here, small cap is a passenger train, and banking and financial services is a large cap, very good sector, but unfortunately, because of this coronavirus, it is giving minus 35-40. So, when they have both come down at the same level, which is going to bounce back? First, small cap or banking and financial services? Of course, banking and financial services is going to bounce back. So, you need to allocate your resources accordingly, and that's what we are taking a bold call, and feel free to ask me questions on this and I'll answer. Now, again, this banking and financial services, not every bank is going to do well. The PSUs will have tough time, because for them, getting the digitalization and the image building is not possible now. It's the private sector bank, mutual fund companies, all those new insurance companies, credit card companies, they are going to take the lead. So we need to focus on the private sector, not the PSU, except for State Bank of India. Now, this is a report of 2019 in May, prepared by Fidelity, where it says that that next 20 years, last 20 years, the world GDP was 2.7. Next 20 years, it's going to be 2.1% growth. In that, US is here, India is going to lead the charge. If you see that now, this may have slightly changed because of the coronavirus, but let's say but this has gone down for everyone, correct? So if things start becoming normal, the biggest change lead in the world economy is going to be from India, the growth rate wise, correct? And if that happens, you're going to see the banking and financial services recover very sharply, and that's the reason I'm showing this. Now, my other objective is, when this kind of turmoil happens, I want to show you one small video that why a proper strategy is very important. So in a storm, when you get caught in a storm, you are in a small boat and a big boat. So how a small boat and big boat, what happens, correct? So I'll just show you a small video. Now, see, this is a storm and this is a big boat which is navigating through the storm. Now, if you see, these are the five, you can see the five structures. The hull is the large cap and the other sectoral. And this is a very small boat, a small family doing random investments on its own. How it gets caught, correct, in the storm. So you need to have a proper strategy. Let me show you this video once more. Yeah, okay, so let me show you this. Yeah, so your portfolio is like a boat and you have to navigate your portfolio in a storm. So you need your portfolio should be so strong that it should be able to withstand all this thing. Now, if you randomly, haphazardly go with a small boat, your portfolio, this is what's going to happen. And that's my objective of showing you how you need to build your portfolio. Now, the other thing, I'm going to take starting questions, but before I do that, let me make an announcement. Next week, I'm going to take a webinar on how to diversify your investments globally. Why should you diversify investment globally? Why should you invest in equities in US, Japan, and all those other countries outside India? And what percentage? I'm going to talk about that in my next webinar. So please do subscribe to our channel so you'll get an automatic notification. And for doing that, go to your YouTube account, search Simplicity Investing Advisors India Private Limited. You will see our page and click on this subscribe page. Once you click, and there's a bell there. You click on that bell, you'll get automatic notification of all our YouTube videos. So this will help you. I would encourage each and every one of you to do that, and you can also send these things to your friends. This is a very good educative initiative we have started, and we would like to have as many participants as possible. Thank you very much, and I'll take your questions now. I'll take your questions. The first question uh, is it a right time to invest in gold? Okay, the goal should be 5 to 7% of your total portfolio. Now, gold has already gone up by 100%. Not in last 5 years. I would gold now knee-jerk reaction should not be there. It should be every month. If you're investing 100 rupees every month, if you of that 100 rupees you put 5 rupees in gold, I'm fine. Not allocating 100% to any one asset class. It should be in a proper proportion, and you build it over a period of time gradually. Gold is a not a bad investment, but it should be done gradually. Hmm. Why is stock for banking sector overall in India down? NPS not efficient or manipulated? This was not clear in the presentation. Okay, very good. Now the banking stocks are down everywhere in the world, even in US, in India, because of the fear that there will be a higher allocation of NPS in the coming 2 quarters. So the current prices of banking stock includes it factoring that next 2 quarters you will see more bad debts, non-performing loans. People will not be paying their loan installments, and that's been factored into it. So stock market always works ahead of. See, nowadays it's not possible for any one person or 2% to manipulate the stock market. You can manipulate one or two stocks, but you cannot manipulate the entire market. That's not possible. Now, the banking sector overall has been hammered in US and India everywhere because of the coronavirus and slow down the economy, and people are not going to. I mean, all the governments in the world are giving 2 or 3 months extension for paying back the dues, and that's why that is factored in that price, and we should take advantage of that. Next question is, what is the impact of Franklin Templeton closing the six funds? Uh, the Franklin Templeton, okay, so in India, the debt market is not as liquid as the debt market is in America. In America in 2008, they learned a lesson that if Fed didn't support the debt market collapsed, correct? In 2008, that's what happened in America. This time, the Fed started buying the private sector bonds also in America. In India, RBI is not doing that. RBI is only buying the government of India papers. Now, they'll have to inject liquidity in the market. Now, what happened is the BA short-term bonds, because the heavy redemption pressures, they were not able to liquidate or sell the market in the secondary market because nobody was there to buy, and that's why they had to close down those schemes. The money is not going to go bad. Okay, what is going to happen is uh, all those six schemes, the investor is going to get that money on maturity as and when those companies pay that loan installments. So let me give an example. These were all short-term bonds, and Franklin Templeton had issued 3 months, 6 months bonds to bought 3 months and 6 months bond from various companies. Now this coronavirus happened, the economy got shut down, and they were not able to pay. The companies were not able to repay that 3 months bond because the business was closed, correct? So they wanted a rollover. At the same time, Franklin got redemption pressure, so where they'll get the money. And so that's the reason they decided to shut down the schemes. And yeah, there will be a short term redemption pressures in the bond market, but long term, I don't see the impact. There, RBI will inject liquidity, and we'll see improvement gradually. Yeah, we'll see that. Next question I have is, what about Okay, so what about NPAs of public sector banks and failure of private sector banks? Um, Let me put it this way. There, let's say earthquake happens, correct? When an earthquake happens, somebody is going to get hit, correct? No matter what it is, correct? So this economy got a shock, and Indian economy was already going through a correction phase for last 3 4 years, and this coronavirus has happened. Now, when this massive impact happens, somebody is going to get impacted, and all businesses like today, if you let me give an example of airline industry, every airline industry everywhere in the world has gone bankrupt. So every government will have to bail some of the airlines, give them concessions. Otherwise, the airline industry is going to close down. We no world economy cannot afford to do that. Now, same thing has happened in India. This NPAs were not intentional. Uh, the situation happened that way, and the market has its own way of mechanism to sort this issue out. And we'll see improvement this, and I like I said, in 21st March last month, we all thought the world is going to end, correct? Every day the markets were falling by 5%, 10%. 2,000 points fall was a normal for 1 week that time. And suddenly market turned around on 21st March, and we are 25% up from the bottom. Uh, so when everything looks gloomy, today everything looks gloomy, you will see a turnaround in the coming week as the economy starts opening. As the economy starts opening, and yes, there will be some players who will get impacted. Now, what we have to do, we have to stick to good management, good companies, cash-rich balance sheets, and stay away from over leveraged businesses. Now, other interesting factor which I noticed, okay, I'll give you another example. In 1980s and 1990s, interest rates were very high. Interest rates were very high, and today the interest rates are very low. That time interest rates in India were 18% to 20%. Today interest rates are 8 to 10% for borrowing. But the number of bankruptcies today are 5 times more than what was that time. Why? Because there is oversupply, there is overcapacity in every industry, and that's the reason. So anyone who had a leveraged balance sheet is going bankrupt because of coronavirus. So you should not invest in companies which have heavy leverages. You should invest in companies which have strong balance sheets. So that's why again I'm saying large caps are a good place to do that. Uh, should we reshuffle our portfolio at this stage, diverting investments to IT, healthcare, service bank? No, we should not randomly shuffle. We should properly, okay, so let me tell you, I'll give you another example. You have three sons, and 1 year one son does well, second year another son does well, third year the third son does well. So are you going to shuffle them and start spending more money on the one who does well that year and ignore the other two? No, you are going to have a balanced approach, correct? Same way in your portfolio, you need to have a balanced approach, and you need to uh, identify the sectors and the allocation and stick to the plan. If you're going to go shuffling, I guarantee you will never make money, because you'll always be chasing the high. Then, is it the right time to shift investments from India to US? That's the next question. No, the answer is here. It depends on where you're going to live. So, Indian residents who are living in India should have at least 60% to 65% or 70% money in India. The thumb rule of investing is you should always invest 70% of money in the country where you live, and only the balanced money should be outside that country. So if you look at Americans, they invest 70% in America and 30% outside America. In spite of America giving highest return, they do invest in international economies. Now, same case is in India. If you are living in India, you should have 70% in India, 30% outside India. But unfortunately, in India, everybody has 99.9% money in India. That should change. But you can't do 100% in America or 100% in India. That's not a good strategy. How many people, builders have gone bankrupt in the last 5 years? Should people stop buying properties? No, people who need houses should buy properties, but people who are buying properties for investments, they should not, correct? Now, again, if I was a 25-year-old engineer, a young person who starting my career and I get a good salary, should I buy a house or stay in a rented house? I would stay in a rented house. Renting a house is much cheaper. Why would I take a mortgage and buy a house? It's not worth it. So it depends on case to case. Property, those who had invested in real estate as an investment, I think that's going to reduce and there's a lot of liquidation going to happen. Investing in real estate is not going to be a good in the near future. But if you're buying real estate for your business or if you're buying real estate for your own family living, it's okay. Yeah. Okay. You mentioned that we should increase proportion of banking and financial services allocation. How do we do that? By stopping other sector SIPs and diverting this to banking? No, no, no. You should not do that. What we should, in case to case, we have to look at the allocation. So if you have allocation to small uh, scale sector, small cap sector, then yes, you can stop allocation to small cap and increase to banking. But you should not stop your allocation to pharma or IT or other sectors and put to banking. Now, if you have some lump sum, you should put in banking slightly more than other sectors. That's how you rebalance your portfolio. To what extent is banking sector prone to NPS for the next few quarters due to the effect of coronavirus? Yes, that's a good question. Uh, Nobody knows that. We'll come to know that in next 2 quarters as Indian economy opens up and how the bailout package is given by government of India to all these industries. And that's why we are going to see a lot of volatility in the banking stocks and financial services stocks in next 2 quarters. But when I'm saying banking and financial services, uh, every stock is not going to see a lot of high NPAs. Those who are having retail banking, those who are focusing on servicing like asset management companies, insurance companies, they should have a decent profitability, but their valuations also have come down. So you should invest in that from that perspective. I would avoid buying any particular stocks because we don't know which. That's why I would buy a bunch of stocks put together in a mutual fund so I diversify my risk. Indian tech-led banks like IDFC Bank getting battered due to lack of adoption and slow rural penetration. Yes, IDFC is a very good bank. Uh, yeah, it has got battered. It has come down from 50, 60 rupees to 22, 23 rupees. Yeah, that happens. I'll give you a classic example of Citibank. In the year 2008 crisis, Citibank stock was $1, just $1, and from there it went to $70 in span of 5 years, 70 times. So in the bad times, everybody gets hammered. Everybody gets hammered. Nobody looks who's good and bad. Everybody gets hammered. So just now you will see some real good valuations. Mm, And also, what has happened? The stocks got hammered because of over leveraged positions. So, let me give you an example. Let's say I bought a huge quantity of IDFC Bank and I took loan against it, 70% on that. And the stock, when it came down by 20%, the bank had to liquidate my stocks. because I was not able to pay the margin money. So that stock is coming for selling for no fault of IDFC Bank, correct? And when this kind of deleveraging happens, there is a cascading impact on the stock market. So that's what happened in last 2 3 months. Not necessarily everything came down because of NPAs, or there are multiple factors why stock prices go down. One of the biggest factor why the stock prices went down because of deleveraging in the market which was happening. Whether it will be a good investing in infrastructure, if yes, by when? Infrastructure sector has been really, really beaten down. Um, a stock like Bhel is at 22 rupees, which was 400 rupees stock a couple of years back. If you have 5 year horizon, time horizon, yes, infrastructure can be good. The risk reward ratio from a 5 year perspective is more favoring reward than risk. Yeah, from a long term perspective. But our infrastructure also includes banking, correct? Then, so the first will be the banking to move up, and then the infrastructure stocks. Yeah, what's your view on the Geo Facebook deal? Is there a talk on WhatsApp will be starting digital payment? Yes, that's the objective, correct? They have come with to become a leader in the digital markets, financial payments, YouTube, in media, in every aspect. So let's see what happens. Facebook and Geo combination is interesting. What's your view on Bajaj Finance? Yeah. Bajaj Finance is again a retail, so it got hammered because uh, non-payment of the close down of economy, and most of the retail segments won't be able to pay. Same case happened with Bandhan Bank. Same case. So in today, everyone has got hammered. Yes, Bajaj Finance is a good institution and it's a good price today. Good value buy, I would say that. Mm. Is it investing in small cap feasible in the current situation, and should we move out of small cap and mid cap? How safe? Okay, I can't give a very generic answer here because if you're moving from small cap and mid cap and you're putting the money in fixed deposit, then you're permanently booking a loss. I won't recommend that. But if you're moving from small cap and mid cap and going into banking fund, yes. So it case to case situation. I can't give a general answer. We have to see the portfolio and analyze it from that angle and give the proper answer. What should be the advice for all small time investors who have been hit by this pandemic situation and would want to get into the run quickly? Okay, so I showed you that video on that small boat and a big boat, correct? What happens to the small boat who is trying to navigate the waters on his own? You should uh, you should avoid investing based on emotions, watching CNBC, money control, and directly doing. You should work with someone, have a proper strategy for 5 years. Okay, I want to build this much capital. This is the way I'm going to build it. This is the process I'm going to follow, and this is the discipline I'm going to do it. You have to do it that way. Then you're fine. Yes, the credit cards will be out of questions. Is digital wallet taking the lead? Yes, digital wallet is going to take the lead, but digital wallet will also offer you credit cards, correct? Like limits and all that. So that's happening in US. Same thing will happen to in India. Credit cards are not going to be replaced 100%. They'll be credit card gives you 45 days credit, correct? So digital wallets you have to deposit the money in advance. So there will be a combination. There will be a combination of that. Nippon AMC got hit yesterday. Are you we seeing more AMCs coming out with NPAs? Um, so there, Nippon. You're talking about Nippon AMC stock price, correct? Uh, let's differentiate between the mutual fund and the AMC company, correct? So, mutual fund, the AMC company is only an advisor who manages your money. They don't take your money. The custodian takes the money, he gets the money, and based on the advice, they buy those stocks or bonds or whatever it is. So, the NPA is not there in AMC particular. The value of the assets managed by every fund house has come down, so their income is going to come down. So let me give you an example. Simplicity, we were managing 200 crores before this coronavirus happened. Now the value of that 200 crores has become 150 crores of the assets. So what happens is we earn on that total AUM. So our income has come down. I'm just giving you an example, correct? So same thing has happened with all AMCs. The value of the assets they were managing, and they earn a fee of 20 or 30 basis, that has come down. Now the NPA happens in the schemes, correct? And the schemes losses the investor takes. Now the schemes which have got hit is all junk bonds, or those kind of bonds will take a hit. Now if somebody has invested in high credit risk bond fund, yes, then it's going to take a hit. But if somebody has invested in AAA bonds, so we can't generalize the answer. We have to go scheme specific. Even within the AMCs, every scheme is not bad. Every investment is not bad. You have to analyze each scheme. So as I said, one Indian does wrong, that doesn't mean all Indians are wrong, correct? And we should never generalize that. You have to go and see each and every specific investment and analyze that from that perspective. Yeah, I hope I've answered. Any more questions? Okay, one more question. Okay, automobile sector, good if we have a 10-year time horizon for investments. At 10-year horizon, every sector looks good from today's perspective. Yes, automobile sector is also one of the core sectors. In fact, yes, I feel even the medium term and short term automobile sector will do well. Why 10-year? Even medium term will do well. Yeah, it's good. I would say that instead of investing, what do you call, in any one particular stock and taking a risk, go with a basket of stocks or basket of mutual fund. Will interest still get added in moratorium? Uh, okay, good question. I don't have answers to that. I have not come out of means that will depend on RBI. In US, it has not come. They have not come that way. They have given extension. It won't get added in the moratorium now. The chances of that happening are very low. So with that, I end my today's webinar. Thank you for attending it. I hope you liked it. Feel free to give your comments and on the channel, and you can subscribe. Thank you very much. Thank you. Have a nice day. Thanks.